Welcome to Stable Dash per Bluechip edition, recorded at the Bluechip Conference in Vienna. I'm Chiara Munaretto, and if you're new here, this show is all about stablecoins. Today, we're exploring beyond instant SEPA, why a Euro stablecoin, with Vid Hribar, Strategic Partnership and Ecosystem at Raiffeisen Bank International. Thank you very much for being here.
Thank you for the invitation, Chiara.
A pleasure. So, I would say let's dive right into. I think by now the news have been all over the place that Raiffeisen Bank is collaborating with other 8 banks to release one of the first bank stablecoin issued stablecoins within the European Union. Can you elaborate? What are you working on? What is the goal?
Yeah, sure. So the news has been announced in September that now it's 9 banks that are planning to issue a Euro stablecoin. But the story actually starts even before. So we started with this around 2.5 years ago or 3 years ago when we were just 4 banks. What we did at the beginning, we wanted to answer the question, does it make sense to join forces and issue a Euro stablecoin? And we did a lot of assessments on the business side. So what are the use cases? What is the business case of this new entity? We covered the tech side. So how the infrastructure of this new entity would look like and who are the vendors that can help us with this. And last but not least, also we explored all the legal risk regulatory requirements for such an initiative to happen. And fast forward, now we're 9 banks that decided to establish this new entity based in Amsterdam that is planning to issue Euro stablecoins. Currently, we're applying for the license, so we're planning to go live somewhere in the middle of next year.
And so it started really as a working group, right? Was it more of an initiative that a specific bank started, or really at the same time, these 4 banks, maybe you can even name the names of these leading 4 banks, decided with their representatives, I guess, within the digital assets space, or how exactly this initial working group of 4 banks got together?
Exactly. So I still remember the first meeting. It was organized by ING at their offices in Amsterdam. And there we started discussing what are stablecoins, what could potential impact on us be, and also how can we participate in this new ecosystem. So this is how everything started. But then quite quickly, we had 4 banks that were willing to explore this even further. And then when we reached 6, 7 banks, the consortium naturally started to grow. So when you reach this critical mass, then it's also easier to attract more banks. And even now we received a lot of interest also from the other banks. We are an open consortium. So we plan also to expand the consortium in the next couple of months.
And how does consortium fit within the broader Raiffeisen stablecoin strategy?
So we have been looking at what we call new forms of money, from CBDCs to tokenized deposits and also stablecoins for quite a long time. We had also some POCs that we did in the past. We issued, for example, an RBI coin. Together with a fintech partner of ours. There we tested this stablecoin. This was even before MiCA. We tested it for cross-border payments. We compared this to the traditional systems in terms of the benefit that the stablecoin transactions could bring.
Is it a test environment?
It was a test environment. Then on the other side, we also used it to settle a tokenized fund share, again, in a test environment. And what we learned there was that from a legal perspective, we need the legal certainty. And this is something that came with MiCA. From tech perspective, this is not rocket science. So we can definitely do it. And thirdly, what we learned is that if we issue a stablecoin and if every bank issues their own stablecoin, the market will be very fragmented.
Yes.
This is also what led us actually to join the consortium and to use this collaborative approach.
I think this is a very interesting point. And I would like to expand it a little bit, comparing private issued stablecoins and nation issued stablecoins, because as you also said, if every bank starts issuing their own stablecoins, it can become quite complicated in terms of interoperability. But if every nation start issuing their own stablecoins, we get back to the same issue where we have tons of so-called currencies, let's say. So what are your thoughts there? Do you think that there should be also, like the European Union is doing, for example, that is trying to come up with one main stablecoin? Or you think that it's still fine if every nation will issue their own stablecoin?
Couple of points here. I think that everything started with, I don't know, was it 10 years ago with Tether and Circle? And we see that the stablecoin issuance market is also developing. What this Tether and Circle, for example, started way back is that there is a single fintech that is issuing global stablecoins. Now, what we're seeing also that this issuer model is changing because it's getting easier and easier to issue a stablecoin.
Yeah.
You have services that provide this stablecoin as a service, so everyone can issue a stablecoin. So this is getting easier. We're taking a bit of a different approach because we have the distribution channels, we are the banks, and we now as the next step decided to issue a stablecoin. So we took a bit of a different approach when it comes to the nations issued stablecoin. So I think that we know for example, Wyoming stablecoin, right? There are also a couple of other initiatives. I think that every initiative will have its own goals. So maybe the Wyoming stablecoin goal is a bit different than ours, or for example, Tethers. But definitely in the future, I do expect that the market will consolidate more because now we're still in this innovation phase where everybody is issuing their stablecoin. And at a certain point, we will see that the market will be fragmented. The question is, can they provide enough liquidity and the distribution? So I believe that the market will converge and kind of consolidate to, let's say, top 3, maybe 5 stablecoins in every currency.
In every currency. I think this is a good point to mention. And so do you think that we can avoid fragmentation in any way, or fragmentation is actually necessary to foster innovation as fast as possible? So we kind of do this probation period with stablecoin issuance as fast as possible to reach those 3 to 5 stablecoins that you mentioned.
Yeah, I think this is a typical innovation cycle. So at the beginning, everybody's doing everything, really just throwing spaghetti at the wall and seeing what sticks. And at one point, we will also see that the market will consolidate and we will see the winners. I mean, also on the US dollar stablecoin market, you see that there's Tether, there's Circle, and then, I mean, for a long time, or in terms of the volumes, there's a big gap between then the next stablecoins.
Yeah, so we already have some stablecoins that are way more dominant than others. It's more a matter of for how long they will be lasting as market leaders, or whether there will be other solutions that will start competing with them. And perhaps the distribution role that a bank could play that already owns the distribution, that could be a good competitor in that case, without, compared to, let's say, a startup that maybe start from scratch and needs to build up the distribution itself.
Exactly. I mean, distribution is not easy to build, right? And we see that, I mean, for Tether and Circle, it was a bit different, but we've also seen that, for example, Circle's distribution costs with the deal with Coinbase, the distribution costs are quite high. And also when, talking to different exchanges, of course, there are also some expectations about the revenue sharing. Distribution costs will be a big problem, and not everybody will be able to actually do this. So I believe also that for a broader stablecoin adoption, also banks have to join the distribution network. And I believe that this is the way forward. I believe that we are the closest actually to achieving that.
And when you mentioned stablecoin adoption, what kind of role do you think stablecoin education plays in this? And how can we ease stablecoin education for the all different variety of stakeholders?
Yeah, I mean, it plays a big role because every kind of use case development or every idea actually starts with a lot of education beforehand. So this is something that we have been also doing internally in RBI, but also
which department specifically? Like, do you see that it's more relevant to certain departments over others?
So at least my personal opinion is that stablecoins will disrupt or will impact the capital markets in terms of the settlement, but also the payments space. So talking to cash management, talking to also treasury, these are our usual stakeholders.
And do you still see it as a part of innovation within a bank, or do you see that stablecoin expert should actually be integrated within these specific teams?
This is the ideal case. Unfortunately, often it's not like that. So I've been having this role trying to pitch stablecoins now for, let's say, 3 years. And at the beginning, it was much different because there was almost no pressure or almost no interest. Now the interest is also starting to pick up. But I think that with every innovation topic, you have to bring it to a certain level of maturity that you can hand it over also to the business lines. So this is also actually my role, to bring the topic to this level.
And to a certain extent, it might also be easier to add education around stablecoins to the current teams instead of hiring a completely new wave of experts, which also like expertise with stablecoins is something that is constantly evolving because we're all trying to figure out what can you do with it and how we are actually going to make use of it, right?
Exactly.
And if we compare stablecoins to the digital euro and to the other more wholesale initiatives that the European Union is bringing forth, how do you think that the two could coexist together?
So on one side, the digital euro and the project of the ECB, we were observing it, or we are still assessing it. The thing is that the digital euro will not be based on blockchain, right? So it
Yes.
can really support these daily spending use cases. There's a threshold. I think that current discussions are around 3,000 euros. The corporates can accept it, but cannot actually do transactions with the digital euro. So it tackles kind of narrow set of use cases. And I think that the use cases for stablecoin are much different. So if we look where actually the stablecoin use cases are going, this is going more in the direction of cross-border payments. This is something that the digital euro will not cover. Settlement of tokenized assets, again, on blockchain. So the digital euro is not covering this. So I think that these two things are actually complementary. And when it comes to the wholesale CBDC discussions, we are also welcoming the next steps that the ECB is doing that there with Pontas and Appia. But the thing is that this is only available to wholesale participants, right? So when it comes again to corporate payments, this is something that will not be supported by the wholesale CBDC.
So do you think that it's, let's say, strategic to have all these different type of solutions that are relevant to different layers within the different money movements? Or do you think that at a certain point we will have one main solution that can be used across all levels?
No, I do see that these are different layers of the money stack, actually. I do see that all of them will still evolve. Exactly how the future will look like, I think nobody can predict at this time, but I think that all three can definitely coexist.
And when we look instead at other types of euro-denominated stablecoins, like for example Euro or even just USDC, how do you see those coexisting together? Will it come down very much to the choice of the retail itself that chooses the preference over one currency or the other? Or how do you think that that's going to play out?
Yeah, I don't have an exact answer how this will play out. But definitely what I can say, I do believe that there will be multiple stablecoins there, and that also exchanges, CASPs, also banks in the end will have to support different stablecoins. If there will be a preferential stablecoin, most probably yes, but definitely I think that also banks should be prepared to integrate more stablecoins.
And do you believe that sectors could play a role in the choice of stablecoins if the design of the stablecoins could be slightly different and adopted to different sectors? So let's make the example of grocery stores, so like more like merchant payments compared to logistics, which also involves cross-border payments. Do you think we could reach, and of course we never know, but do you think we could reach a point where we have very specific payment rails as well as very specific stablecoins purposely built only for use cases that vary per sector?
Yeah, I'm not completely sure that this is the future, because how I see stablecoins is more like a commodity, especially when we're talking about regulated stablecoins. There is not a lot of leeway that MiCA gives you to create a much different stablecoins than the others. So this core is actually pretty much the same. Of course, then it's about the choice of blockchain, about liquidity, about the distribution. So there are some other success factors, but just when it comes to the core of this stablecoin, this is pretty much similar to all the stablecoins.
But in the end, it comes down to regulation, it comes down to compliance. So regulatory bodies are the one somehow determining how the stablecoin future will look like, depending on what is allowed and what is not.
Definitely influencing.
And closing down, coming back to the euro-denominated stablecoins and the consortium that you're building right now, how do you think that having a euro-denominated stablecoins could reduce the dependence on all the current USD-denominated stablecoins?
I mean, you're aware that currently more than 99% of stablecoins are denominated in US dollars. And this is something that we have observed even before. However, now when the volumes are also rising, we see that this is becoming more and more a threat. And pairing this with the plans of the US government to be the global leader in digital assets, this is starting also to kind of influence the European authorities or the decision makers here. And definitely we all do see this threat that especially US dollar stablecoins are taking a part of or becoming an important part of the payment infrastructure in Europe. That's why we believe that it's very important also to support this European autonomy and to not be dependent on US dollar stablecoins. And this is also one of the main reasons why you decided to join forces in and build a European solution.
To make a very much bigger impact with, from the start, impact on distribution as well.
Exactly.
And if we need to look at the KPIs of this consortium, what would make you think that within a year this consortium has been successful or not?
So our immediate milestones are now to apply for the license, to get the license, then somewhere mid of next year, and then start to issue stablecoins. We will have the first partnerships announced then next year, but the first thing is definitely we want to be fully aligned with the regulation, fully compliant. So the first milestone is definitely to get the license. From then on, we will definitely start to grow as fast.
And when you mention issuance, do you issuance will be available directly to retail, ideally, or will you go in batches and layers?
Yes, so the issuance will be available just to regulated entities, not to retail.
Okay. Well, thank you very much for the nice conversation. There is a lot going on, and I am sure that next year we will have even more to discuss. Thank you very much all for listening for this next edition of Stable Dash per Bluechip. And if you want to hear more about Stable Dash, you will find a lot of episodes around it. And thank you very much again. Awesome.
Thanks.
Perfect. Thank you.